Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, May 15th, 2018, and this is the Daily Report for Gold and Silver. And what a day we have seen. Dramatic sell-off in the precious metals markets with higher yields in bonds and a sharply higher U.S. dollar. Gold losing $28.10 today in the futures markets, $12.90.10. Breaking well below 1,300. We did pull profits earlier today, and we'll talk about that in detail as we pull up our technical studies. Silver losing about 2.25%, 37 cents, closing at 16.27, and that's partially responsible with a strong U.S. dollar gaining 66 points, now at 93.13. The Dow did decline, breaking that 8th consecutive day winning streak, closing at 24,706, down 193 points, and Bitcoin futures losing about $220 with the CBOE and CME prices at 85.45 and 85.35. Traders, higher yields in U.S. bonds along with a stronger U.S. dollar created a dual force today, taking the precious metals complex dramatically lower, with gold plunging $27 plus today, currently trading at $12.91. That is a net decline of 2.06% on the day. Fortunately, we did trail our stops higher yesterday. If you recall from yesterday's show, we went long gold at 1307. That is back here on this candle here. And then initially, we had our stop below these lows here at about 12.98. However, yesterday, we suggested that we trail our stops higher, moving our stops to 13.10.50. That would be this critical area here. And that was, of course, before the market plunged, trading about $10 lower overseas, and then literally falling out of bed as it moved into New York trading today. And although I had hoped for a little bit more profit than we pulled from our last trade, which is roughly $350 per contract, I am quite happy that we did exit the trade prior to this major decline. So the question now becomes, where could gold trade to from here? Could it find any kind of support in its current pricing, or are we looking at a high probability of sharply lower pricing to continue? And to answer that question, I first draw your attention to the intraday low that was achieved in trading today and how it lines up within 10 cents of the 0.618% retracement that comes in at 12.8830. The low in the market today was 12.8820, so just 20 cents below this particular price point. Now, this is a large data set that we're using from the lows that were achieved mid-December up to the highest trading point that gold has achieved this year, and the 61.8% is really the last acceptable level of a bull market run and a following correction, which gives back 0.618 or 61% of the gains achieved during the rally. That is precisely where we are at. We can also see that once the market hit those lows, it did bounce off of the lows and then tracked just a little bit higher as the market closed for the afternoon session. Inasmuch as we know that current gold pricing is reacting to a sharply stronger dollar and higher interest rate yields, we need to be aware of this current level, because my sense is if we see any kind of support come into this level, we could see some sort of bounce to the upside, even if it is a short-term bounce before returning to lower pricing. Obviously, if the market begins to trade under continued pressure and breaks below this critical area, the only place on a technical basis that we could see gold pricing go to is the 78% retracement at 1267. Traders, the fact of the matter is we are currently flat. We pulled a small profit on our trade today, and we could see an incredible opportunity if gold pricing finds some footing here, finds some support, and begins to track higher. It would allow us to position ourselves at around 1290, 1291, and I do not see any real resistance in the market till about 1303. However, the key, as I said, is whether or not this price level holds, because if it breaks, the opportunity presented might be a short play as the market moves from 1288 to 1267. For now, I prefer to let the dust settle and see how gold pricing unfolds over the next 24 to 48 hours. Silver losing about 2.25%, 37 cents, now trading at 16.27. The key area to look at in silver is the 23% retracement, which comes in at 16.23, and below that, these series of lows that come in roughly between 16.07, the low achieved right here, and 16.23, the 23% retracement. Just as in gold, if silver holds these levels, we could see a modest upside bounce with resistance at about 1663. However, a break below these recent lows, and the real target would be $15.62 based upon the lows achieved mid-December of last year. And traders, lastly, Bitcoin futures. We are looking at the current CME contract, which traded down $220 today, currently at $8,535. The critical area to watch is the 50-day moving average, which is currently at $8,464, just below current pricing. A break below the 50-day moving average would put the next level in sight roughly at these tops, which come in at about $7,500 to $7,600 per coin. Should this area of support hold, we could see the market make a stab once again at 9,200. Traders, fortunately, we did raise our stop yesterday in our long gold trade, and although we took a fractional profit, about $350 per COMEX contract, I am pleased to report that in light of where current pricing is. More importantly, the point that gold is at is a critical support level, that 0.618%. If it holds, it gives us an incredible opportunity to buy the dip. If it breaks, it gives us a very, very strong opportunity to sell the continued correction. We'll have to let the dust settle and see how this unfolds and act appropriately. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.